So let's take a look at the Wyckoff as usual, and also the daily movements, and see what the charts are telling us. So before getting into the details, you already know the practice. These sessions are for education and research purpose only and not financial advice. So please take note of that. And let's get right in. When we look at this chart, well, over the past week or so, because I took a pause last week, so there wasn't a chance that I gave you an update. It seems to be very encouraging for the crypto market overall. But when we look at the chart here, if I were to draw a few points, so we see these gap, right? And then the two tail of those two candles. So these four candles are actually telling us that there is resistance level right over here at around 21 cents. Let's round it up and let me assign yellow. So this, when we look at the past 2 weeks including this week, so these two are basically being suppressed by this resistance level. So if I just make it visible for the current interval and look into the daily chart. So basically, continuing from what we left off 2 weeks ago, basically, this downward, yellow downward trading range or playground zone is basically completed in the last 10-12 days. So once this has broken out, remember this downward flag is a bullish sign for candlesticks analysis. However, like I mentioned repeatedly, it doesn't mean it's crazily bullish or like mini bullish. It's just at a certain point in time it will break, the price will break out like here and here. When we look at this, as of this moment, it doesn't seem to have a clear trend yet, so it's more or less like this period over here, like around 10, 15, 20 days of horizontal movement to be exact. Let's take a look. It's basically 18 days of relatively horizontal movement. We are only 11 days in, so if it's going to repeat what happened in mid to late March, we've just gone through 2/3 of it, and there may be another week before another upward or downward motion happens. So right now, if I really have to draw something, not that I can see a particular indicative trend, we can still make use of the line that we have drawn over here, the resistance line. Remember I set it current interval and below, so we see it right here. So this yellow line, I don't want it to go to the hourly level, so let's keep it over here. So the trend that I'm trying to point to is basically this horizontal trading range right here. So it's possible that it's going to swing between the yellow line and the top edge of the long-term playground zone, the white box basically. So over here it means that's around 13 cents all the way to 21 cents. So it has already done its first move down here since early March, all the way down to the top edge of the white box, and then now it bounced back up to the yellow line, and now it's going downward again. So if there's no particular crazy moves around the world in terms of economic and political or warfare or natural disasters, then this trading range can likely continue without breaking any of these two resistance and support line. So that's pretty much it for Hedera. I'll move on to Wyckoff next. See you over there.